Hey everyone, a short and quick update to EHang before I leave for my trip to San Diego. I want to explain to you why EHang lost 11% today and why we could see some more losses in the next few days. I will also explain why stocks like NIO, XPeng and Didi lost big amount of their value. But first of all, welcome to High School Dropouts Advice. If you need subtitles, click on the subtitle button right here. If you want to join my Discord channel, you can do this through Patreon, which I link down below in the description. EHang lost 11% today and is trading for about $34 despite strong fundamentals and good news. So what happened? We see that NIO lost about 8.5% and XPeng lost about 6% today. Didi, which is the Uber of China, lost 27.86% in the last 5 days. The drop came right after the Independence Day. Let me explain to you what happened and how you should think about owning Chinese stocks. China's Didi crackdown could hit Tesla and other stocks, analysts say. Chinese Communist Party banned Didi from App Store following its IPO. So Didi's IPO was a few days before Independence Day, and during this time the Chinese government indeed has banned Didi from the app stores. Let me read this little part for you so you know exactly what is going on. The regulations around autonomous driving in China could get stricter over time and may present some increasing challenges to foreign automakers in the years ahead. Morgan Stanley analyst Adam Jonas wrote in a note Tuesday. Jonas warned that Tesla could face similar issues in China given its mapping and artificial intelligence technology. Just days after Didi's initial public offering in the US, Chinese Communist Party regulators cut off the firm's ability to sign on new users and then followed up by having it booted from app stores over alleged cybersecurity concerns. The government's moves kicked the legs out from under Didi's Wall Street debut, sending the firm's share price into a downward spiral and sparking lawsuits from investors. We know that EHang, NIO, XPeng and Tesla are working on autonomous driving, and China might not be happy about the data it saves from its user. So we see companies' share prices drop, which are active in the sector. There's no doubt that this is a bad event for Didi investors and Chinese stock investors. But as an investor and smart individual, we have to think if this could happen to other companies. We know that there always had been debates at Facebook, Apple, Twitter, other social media platforms and tech companies about privacy and security concerns in the United States. In my humble opinion, this is something every country is concerned about, but every country handles the same concern differently and gets labeled by other countries differently. It's an unfortunate event for Didi investors. A lot of value got burned here, and the question is, how much did Didi know and how much did they warn their investors? This is what we read in the New York Times. Failing to disclose prior awareness of market-moving regulatory decisions could make Didi and the bank that arranged the initial public offering, Goldman Sachs, Morgan Stanley and JP Morgan Chase, vulnerable to investors' lawsuits and regulatory problems in the United States. So, US banks are involved too. So we don't know to what extent Didi knows about the upcoming actions of the Chinese government. There were hints that they are working together to solve the security concerns. No matter how we want to see this issue, we need to understand that every country has the right to safety concerns and will limit their companies if they feel they have to. It usually is nothing personal between the Chinese government and the US investors. I think that most Chinese companies want to get listed in the US, and the US sponsors like to list them to make money together. So it's no surprise that we see US banks and sponsors involved in this mess as well. What does it mean for NIO, Xpeng and EHang investors like me? I would say we can compare this issue with the privacy, freedom of speech and big data collection of social media platforms in the United States. The US has their concern too when a company can collect more data and information of the country's citizen than the government. So we need patience, and we will see how the company solve the problem with the Chinese regulatories. I don't think that China is doing this to burn the US investors' money, because in the long run it's better for both countries to work together and have the money flowing back and forth between these two big countries. Trade and commerce are generating wealth for the citizen. So I hope that the tone in the news report can be more objective, because we also find articles like this. Exclusive: China just gave a big FU to America, hedge fund manager says. Those kind of headlines and the article, of course, will attract more readers, but it's also very dangerous. Those articles will not help to solve the relationship between US, China and Russia. I'm not a politician, but I always think that together we can go further than alone. So in short, stay patient and see how the companies play these issues out. It's a way too early to sell, because we know that more or less both countries need each other. By the way, if you want to buy one of the EHang t-shirts I designed, you can purchase one with the link I put in the description. You can choose different colors, sizes and quality of the material. You can buy them worldwide. It's worth checking them out. I will have more EHang related designs coming shortly. If you want to help me out and want to make at least $32, then you can sign up at Webull. Anyways, I'm just a guy on YouTube. Please remember to do your own due diligence and hire a financial advisor if necessary. Please like, share and subscribe to my video and channel when you don't want to miss out any new stock information and investment opportunity. Thank you so much, and see you hopefully in the next video. Thank you. Bye.